interviewing the leading private equity executives and unlocking the secrets of success. Welcome to the Private Equity Podcast with Alex Rawlings.
Hello, everybody, and welcome back to the Private Equity Podcast. Joining us today is Christen Paras, Managing Director of Business Development and Investor Relations. Thank you very much for joining us and sharing your insights with us today.
Thank you very much for having me, Alex. I'm excited to have this conversation.
So, Christen, for those of us who aren't familiar with yourself, please give us the usual 60 to 90 second breakdown of you.
Yeah, absolutely. I'm Christen Paras, and I'm a Managing Director and Head of Business Development and Investor Relations at MiddleGround Capital, which is a buyout firm focused on acquiring B2B industrials, manufacturing, and specialty distribution businesses in the middle market. I said a lot there. On the business development side, I oversee our deal origination effort. So that includes managing relationships with thousands of investment bankers, business brokers, lenders, accountants, lawyers, founders, business owners, and industry executives. I also manage our marketing strategy as a part of that effort. And then on the IR side, I develop and manage relationships with our investors as well as prospective investors, which span endowments, foundations, pension plans, insurance companies, fund of funds, family offices, high net worth individuals. So, it's a lot of relationships to keep track of. I oversee capital raising efforts, both for all of our co-investments as well as our funds. So in the most basic terms, I manage all of MiddleGround's, most important external relationships.
Perfect. That's a lot of people. Definitely a lady in the know, certainly from that perspective. So brilliant. I appreciate that. So my usual question, what's the one mistake that you see either private equity firms or portfolio companies making?
Sure. I can speak from my experience on the BD side. Business development, I think, is something that had historically been tackled by, the principals or partners of a firm and really wasn't, thought of as a, dedicated full-time capacity for many years. And I think that tide really started to shift 5 to 10 years ago. I mean, you would see firms that had a dedicated professional before that, but it's really taken off, particularly within the last few years, and not just having a head of business development and having just one person, but in fact, a whole team of business development professionals, working within one firm. And I think it is really important to be able to have dedicated BD resources. I think that some firms undervalue that function. In today's market, especially in the middle market, which is very vast and opaque, it is hard to find good companies to acquire. The space is getting more and more competitive. So if you have a few people spending 10 to 15% of their time on sourcing, you're really not setting yourself up for success. So to have a real competitive edge in finding the right companies to acquire, I think it's really important to have a dedicated business development effort.
I think I'm definitely seeing that across private equity, certainly more so in North America than Europe. Currently, we're seeing a lot more firms have that dedicated resource and split what they regard as the execution team and the origination team. And we're starting to see that be a lot more common in the States and Canada, and it's starting to filter over into Europe. I think there is always a beginning, and it seems to set the standard with a lot of things. Operating partners exactly the same, where you'll see that happen in the States, and then eventually us Europeans catch up once you guys have tried and tested the model. But I'm seeing more and more firms, certainly in Europe, starting to adopt that, and we're starting to definitely see that. So I think that's a really good way.
Yeah, and especially right now, I mean, we can get into this maybe a little bit later, but the M&A market is very hot. From a deal volume perspective, we're seeing record numbers just, in terms of the industrials M&A market in which we play. And it is very difficult to manage resources appropriately if you're not spending time on the front end, screening through a lot of the top of funnel, it's going to make your life a lot more difficult as as you mentioned, kind of move on to execution.
I think, and we deal with a lot of manufacturing focused, industrial focused, aerospace and defense focused private equity firms, and the competition out there is incredible. And we're really seeing it as this kind of COVID happened, and then everyone was like kind of in waiting mode, and then so many businesses have come onto the market. But I really thought we'd see a thinning out of private equity firms, and I don't even know of a company that's put their hands up and stopped. I just know of new ones that have opened, and the competition is absolutely rife out there, and it's really difficult to differentiate yourself from anyone else. So, what are you guys doing? You're heading up business development for the firm there. What are you guys doing, kind of in an innovative? What are you doing in an innovative perspective to increase deal flow at MiddleGround Capital?
Yeah, I mean, there's a number of different actions that we've taken. And I think part of it is developing a really fully fledged marketing strategy. And it's something that I think a lot of private equity firms have, kind of been hesitant to put more information about themselves out there. And that presents a real opportunity for firms like MiddleGround, where we are, we really want to be transparent about our objectives, who we are, what value and experience we can bring, to these middle market industrial companies, and how, what our approach is. And a lot of that has to do with our culture of the firm, what our values are, our stories individually, and just being able to highlight that and put that out there is a big step that a lot of firms are just avoiding altogether. So marketing is really key for us early on in our in our time as a private equity firm, because we were only founded in 2018. We decided that we were going to have a big presence on LinkedIn. We were going to try to do, some video marketing. We wanted to redesign our website to be able to capture, blog posts, thought pieces, both in terms of, written content, but then also video, and just reach more people that way. Do podcasts like this. And reach different audience members, whether it's, business owners, or maybe it's, investment bankers, relationships that we didn't previously have, and use marketing as a tool to really, get out there and sort of expand our message. So I think that's one thing. We're also really good storytellers on that front. I mean, we do have a pretty unique story in the sense that, MiddleGround, 2 of the 3 founding partners, came from Toyota, one of whom actually was an hourly line worker on the night shift, putting bumpers on Toyota Camrys. So that's John Stewart, and he had 18 years of a career at Toyota. He was promoted very rapidly over the course of that time, and was leading their largest assembly division, actually in the UK, before he moved into private equity. And I think, having somebody who really understands, not only what it takes to found a business, but also understands, what the hourly workers' motivations are, what they're thinking about. That's core to our value system. And that really resonates, particularly with, the founder-owned, family-owned businesses that we acquire. So we're able to, really share stories like that, whether it's our founding partner, John, or whether it's, our operating team who has similar experiences. That relatability is really key. So we definitely try to, focus on telling that story to the right audience members. And that's on the marketing side. That's, just kind of walking the walk, talking the talk as well. And then another thing that we're doing, and this is more sort of on the investment thesis side, is we're spending time while we're opportunistic, let's say, within the broader industrial sector, there are certain places that we think are really interesting and want to spend more time. And so we've dedicated team members, as well as, brought on outside resources like consulting firms, to dig into certain themes and trends that we're seeing. So as an example, we spend a lot of time in automotive, or what we're calling mobility. There's a huge transformation happening in that industry. A lot of it revolves around, the electrification of the powertrain, moving to hybrid and electric vehicles. And that's where a lot of the growth is within that sector. There's a lot happening with connected car technologies, autonomous driving. Vehicle lightweighting is a trend that has been around for many years, but is here to stay and impacts whether it's an internal combustion engine and fuel economy efficiencies, or whether it's range on a battery empowered vehicle. Those are some of the areas where we like to spend our time that are disruptive. Companies are making a lot of investments there, and that are experiencing high growth. So we spend the time and resources to get smarter on trends like that and figure out, there's a lot of sponsors that just back away from auto. They don't understand it. It's scary to them. It's very difficult to manage being a supplier in that supply chain if you don't understand how the industry works. And so we decided let's get even smarter. We have that Toyota lean manufacturing, Toyota production systems background that we apply across our portfolio, but let's really focus in on automotive and find attractive investments there while this disruption and transformation is happening. So that's one area where we have a thesis project and now some dedicated capital to invest, behind some of these trends within the mobility space.
So that's really interesting with regards to your autonomous vehicle, autonomous driving work. It's work that we've done in with venture and seen that, but I haven't spoken to a single private equity firm that's beginning to look at that. And I think that's really interesting that you're pushing, and especially as I was listening to a podcast actually this YouTube this morning actually, and it was talking about Biden's new regulations he's bringing in on electric vehicles and how there's going to be huge amounts of discounts on electric vehicles, and we're going to see a huge crash. Well, we've already seen a decline on the automotive with regards to typical gas-powered vehicles and fuel-powered, but that movement into electric vehicles, and there's huge amounts of discounts for firms that are coming in, and they're even thinking that Tesla might even get that down to like $25,000 for an electric vehicle, and then they're going to knock the $10,000 on top of it, which $15,000 for a car is nothing's a steal, but that seems pretty good from my perspective. So you guys are entering that right at the exciting time and being at the forefront, which no doubt will give you the best leverage moving forward.
Absolutely. And I mean, energy storage, batteries, the technology there is improving, cost is coming down. So, it certainly helps to have some of that intervention with government regulation, but these other factors are helping drive that shift as well, which we like to see, from an investment perspective, that we're not investing into a space that is heavily dependent on, the administration of the day kind of putting policies into effect. So that is certainly a helpful tailwind, but we see a lot of opportunity around electrification. There's also consumer sentiment being, ESG kind of focus, better for the environment. So there's a lot of great tailwinds in the space that, we think make it really attractive.
I think that's brilliant. The first thing you mentioned also is with the drive on marketing. And this is an area that I've done a lot of research and investment into because, I foresee the newer type of businesses, founded the business back in 2017. So you're a year younger than we are. And we've had to invest a lot in marketing just to play. You mentioned how competitive the market is at the moment, and how difficult deal flow is, and obviously LP relationships and winning those over, which is creating a really strong values for your business and then pushing that out. What have you guys seen? Because I know, we spoke just before we came off and called it the black box of private equity. And, I get a lot of people that I approach to come on here can't because their private equity firm won't allow them because of, scared of the SEC or scared of, financial, what do we call it in the UK, FCA, and whatever else has been there. And, we can't speak that private equity exists. It is an unknown entity and top secret. type world. But you guys are obviously pushing that, and there's no reason. I've looked through your content. There's some great videos, great blogs going out there, and bringing value to your portfolio companies and really demonstrating what you do. And I've even seen some of the stuff where you're just walking through one of the manufacturing plants, and it gives people an insight and shows that you're involved. So, firstly, how have you guys managed to break that we can't do this? And secondly, what impact are you seeing from what you're actually putting out there and utilizing this, this digital online type space to generate brand awareness and no doubt generate leads?
Yeah, absolutely. So it's a good question. And I think it applies to really both sides of what I cover. I'll start with even the IR piece, since we haven't really touched on that yet, but it certainly carries through across all of the external relationships we have. And that is, we really try to put it all out there. We're pretty transparent about what we're doing. Our investors love it. This was something that, was just sort of natural in our DNA. We, for example, with our investor base, in addition to other reasons to talk to them, we try to have a quarterly cadence of calls with them where we're, giving them updates on the portfolio, on the firm, other initiatives that we're doing 4 times a year outside of the AGM. 2 of those, pre-COVID would be meetings where we would, invite them to one of our offices or go to theirs. And then 2 would be Zoom calls, which we had Zoom way before COVID hit. So we're proud of that. And that, I think, really, once the pandemic hit, and a lot of manufacturing businesses were impacted in different ways. We continued with that transparency. We told them, we're pretty open about, what operational initiatives we were undertaking to sort of weather that storm. And they were greatly appreciative of that policy. And, it really showed in spades when we went out to raise our second fund, which we launched in January of this year, where we had nearly 100% retention of our existing LPs. We only had one that was unable to reinvest with us just because of their privates program being frozen. So they would have, and they communicated that to us. But I think it's because they get so close to our team, and it's not just me, it's me connecting people with our deal team members, with our operators. They have full access. And we do that on the co-investment side too. As we're doing diligence on a live deal, we offer a lot of co-investment with our LPs, which gives them a great opportunity to get to know how we're thinking about underwriting our deals, how each team member is thinking about a certain investment thesis, and they get to do their process right alongside us. And so having all of that exposure to us throughout the year, I think, gives them a high level of conviction in, putting their money with us as a manager. We're good stewards of their capital. On the kind of business development side, I would say, same thing, right? We want to get the best quality deals that are a real fit for MiddleGround. And there are a couple of different channels that deals come from. A large one is, different intermediaries, so different investment banks. And we want them to understand, here's what our thesis is. Here's our thesis within the automotive mobility space. Here is our thesis around infrastructure. Here is our thesis around Industry 4.0, and spending time to walk through it with them so that they show us more relevant deal flow. It's great to talk about how broad the top of your funnel is, but it's really that middle part of the funnel that you have to care about, and being able to then convert those qualified deals to portfolio companies. And so we want to spend a lot of time educating the market, who are bringing those deals, as well as business owners who would understand what type of owner we would be. I mean, part of our transparency on that front is when we go and acquire a company, we do town halls with every employee at all the facilities, for that company, where we walk through what private equity even is, since it's the first time, a lot of them have exposure to it. And there are some preconceived notions about the reputation of our industry, unfortunately. And so we view our role as, having this voice to be able to change that perspective. And we take that very seriously. So those are a few ways we kind of leverage this transparency marketing type strategy that we have, both in terms of, deepening our relationships with investors, and then also explaining, our approach to private equity as unique to, some of our competitors.
And I think that's a huge differentiator for you guys. And anybody that's listening to this and thinking, okay, yeah, it all sounds great, but what all this brings is when a company's looking at which private equity firm to work with. And we get asked this all the time. What is Raw Selection's USP? What makes you guys different? And the problem is saying that you're specialists, saying that you're X, Y, and Z, sounding like every other private equity firm or every other executive search firm does not add any value, and it only drives on price. And when you've got this, what makes us different? Come and take a look. I've been through your website. It doesn't look like everyone else's. I've seen that you've actually posted on your blogs, and there's actual value, and there's toolkits, and there's whatever it is that's getting out there. It's presenting yourselves as different, and therefore, when a company's or a founder or a business owner is thinking, where do I sell to? It's, well, okay, where does this business get the most value from? If they're doing this on the outset, and I can just look at this stuff now, what are they doing behind the scenes? What's actually happening there? Whereas when you go on a private equity firm's website and it's, the blog hasn't been updated in 20 years. You go on, it looks like, you've walked back to web internet 1.0. I think there's fundamentally here is that impact is huge. And this is a lot where these types of businesses are starting to go, and they're starting to think, well, money's great, and if we exit this business, but where's the legacy? What happens there? And a lot of founders are starting to stay on and retain in the business, and they're starting to no longer removing themselves and going, well, I'm off to do something different. I've sold. They're actually wanting to stay on and take it to the next level, and at least on that first time kind of private equity sound. So if you are listening to this and you're thinking, this doesn't apply to me, it absolutely does. And I'd encourage, to look at how you can implement this into your business, and it will make a difference. And it's the firms like MiddleGround Capital, which are going to start to disrupt, the bigger private equity firms that just use their brand, and the fact that Carlyle and Warburg and everyone else has been known for ages. And I appreciate a lot of that's large cap, but that's where the difference will happen. And that's where you can begin to really build your market and start playing in that lower to middle space and really building your own brand. And okay, yeah, you go to these guys if that's kind of your premier private equity firm. So I think it's brilliant that you guys are adopting that. And there's just not that fear element of, we're scared to put something out. We're scared to change something. We're scared to be who we are. And maybe that is coming from the fact that, one of your managing partners is worked on the shop floor in Toyota, and therefore hasn't grown up in private equity and seen nothing else. And I wonder if that's a key part of why that's happening.
That is, and it really brings up another really key core value for us. And I touched on it just very briefly before, but we do have a strong focus on ESG here as well. And part of that is diversity, equity, and inclusion. So we are the first sub $1 billion private equity firm in the industrial space to be a signatory to the principle of responsible investment. So that was a big accomplishment for us last year. We're holding ourselves accountable on the reporting front. We're putting in ESG KPIs across our portfolio, across our firm, as MiddleGround as well. We're, focused, and part of that initiative is diversity, equity, inclusion. And that is both, again, across the portfolio company level and then at MiddleGround too. So bringing that diversity of perspectives from different backgrounds. So, a lot of our founders, do have different backgrounds, having come from manufacturing. We have one of our founding partners is a woman, Lauren Mulholland. You do not see that with a lot of private equity firms today, which especially in the industrial space, there are very few. So, those were a couple of the things that really led me to want to work with this founding team. And we've really continued that as we've built our team out over the years. I mean, I think I was employee 19. We're now at 46. So we've grown really fast, and, the culture really does start from the top, and it's a huge focus, of our founding team. And we've continued to build out and, hire and recruit. With that in mind, we're trying to get access to more diverse candidates who have different experiences. And we do that at the portfolio company level as well. So it's a huge initiative that we've undertaken. We've actually become a signatory to ILPA's Diversity in Action initiative, which is, again, another thing we're proud of and, excited to be able to kind of report out on our metrics and be a thought leader in the space.
Excellent. Amazing. That's I haven't heard of that before. So that's appreciate you sharing that. So you've also got the two parts of your role. We've talked a lot about deal origination and building that into your marketing and how you're doing that on both sides, both on your IR work, but also obviously on your deal origination to position yourselves and the firm differently. The major part of your role, as you mentioned, is IR, and as we spoke about previously, you're on both the fundraising side and also that relationship management. It sounds like you've got a really good and strong relationship with your investors, only losing one in your second fundraise, and that's out of probably their control and certainly out of yours. What do you think it might be a bit of a big topic, but what do you think excellence kind of looks like on that fundraising side and on that client kind of relationship side? Or if it's easier, what are you guys doing that's maybe a bit different on that perspective with regards to your LPs?
Yeah, absolutely. I mean, I think it harkens back to that point about sharing, a lot of what we're doing throughout the year. I mean, we're not relying on sort of a couple of calls or just our annual general meeting to disseminate information about our portfolio and our team build out, and the fact that we've launched an ESG initiative as an example. I mean, they are really along for the ride. I mean, we think of them as an extension of our team, and I think they think of that of us in the same capacity. By the time we go out to fundraise, they already have a high conviction around who we are as a manager, how we operate. They have close relationships with numerous people at the firm, from the partners, down to some of the more junior folks on our team. So we really try to facilitate that access. And again, just be very transparent about what we're doing, what type of information we're providing. I mean, for example, we have weekly calls with our portfolio companies that focus on finance, operations, sales. Each week we rotate through, and those are all on Zoom, and we invite our investors to join those calls. That's pretty unusual, that level of access. And so, we think that is really important, and we continue to find ways to be able. We've taken LPs around on, site visits to our portfolio companies so that they can actually walk the shop floor. We really do try to give them as much access as they want, because, it's sometimes hard to understand exactly what a precision centerless grinding business does unless you're on the floor in Warsaw, Indiana, looking at, a piece of machinery that's actually grinding down, that metal bar. So that's what we try to do, and we'll continue to do, as we grow.
Obviously, I've been around quite a few industrial plants myself, and when you see some of these parts, and it's just, I think I saw a big machining plant in the middle of nowhere in Connecticut. That is private equity backed, and it was just this big lump of I think it was aluminium, or I don't know the type of metal it was, but I think it was aluminium, and then just got machined into this, with holes everywhere, and it was going on an aircraft, and fantastic that you're bringing your LPs into that and building those relationships, because that's definitely going to keep them in the business and help you guys obviously grow, and is testament to what you've done so far. So bringing this into talent, which is my kind of favorite subject, what three attributes do you believe make up a top performer?
People who are focused on really learning the details. I think, make good investors or operators in this industry. I think you need to have the ambition as well. I mean, it's, to me, one of the things that's most fascinating about our industry is you're always learning something new about what a company does, how it works. I haven't spent my whole career in the industrials landscape. I'm learning something new about a new manufacturing process, about market dynamics in a specific industry every day, and I love that. So being, ambitious about being able to learn a new industry and master it, I think is, another kind of crucial tenet of that, overachiever element that I hit on earlier. And then also being, I think, opportunistic and flexible, sort of being open to trying things or trying to do something a different way that's a bit outside of your comfort zone. I mean, for me, I had been doing deal origination for several years. I have a little bit of a meandering path into private equity. I didn't really, think of it as a long-term career goal. My career makes much more sense looking backward than I ever, thought it did looking forward as a younger professional earlier on coming out of college. But I was open to trying new things. And I think, with respect to MiddleGround, I really enjoyed the fundraising process in Fund One. I involved myself as much as the partners would allow for it. And they actually, my role was expanded to include investor relations about 9 months into my time at MiddleGround. So it wasn't something I was originally hired to do here, but something that I've, a part of the business I've really long been interested in. And so it was great to be given that opportunity and kind of be thrust in the deep end on that. And I'm very, appreciative of MiddleGround for giving the opportunity to not just me, but to a lot of our employees to, put their hand up and ask to do something new and kind of make it their own.
Excellent. I like that. Insecure, overachiever. I've not heard that phrase before, but that makes
for better or worse, Alex.
That makes a lot of sense. Certainly from my perspective, makes a lot of sense. So, what areas of private equity do you love, and equally, what do you hate, or if hate's too much of a strong word, what do you dislike?
Well, what I love, particularly on the deal origination side, is just the process of finding deals that are hard to find. There are going to be a certain group of deals that a lot of people are going to see, and they're broad auctions, and whoever, whichever investment bank is running that process is, going to show as many potential buyers as possible. And that's fine. We want to participate in those, but I really love, finding that interesting deal that is maybe unbanked, or it's a founder relationship that I've developed, or, it comes through another channel that's, a little off the beaten path. That last kind of 10 to 20% of deals that tend to be a little bit more proprietary in nature. That's what's really fun. And being able to connect the dots with other businesses that might be related or that might be interesting from an M&A standpoint. If we're looking at something, for example, in the conveyor space, are there other businesses that, could be interesting in combination that I'm aware of, and kind of piecing together that M&A story for an add-on strategy is really interesting. And I really also love connecting with people. I rattled off a lot of different groups that I'm responsible for staying in touch with and developing relationships with. And I think for me, it's really connecting the dots in terms of, I kind of mentioned it just on the deal front just a moment ago in terms of, buy and build type strategy, but also knowing which deals could be interesting to which of our investors. I earlier talked about the co-investment process. We do a lot of co-invest on our deals where, gives our LPs access to kind of double down on the investments they particularly like. And, just thinking about, this will be really interesting to this group, I should get that in front of them on the earlier side, just take their temperature on it or get their thoughts. I love connecting those dots. It's really satisfying, whether it's an introduction to a company, whether it's a person-to-person introduction. Those are the things that get me really excited. On the flip, what do I hate or what don't I like? I think one of the things that can be challenging about private equity is just breaking into it. I think depending on, and it's starting to change, and we're trying to be an engine for that change as well, as I mentioned with our, DEI initiatives. But, there are some great people out there that don't have a traditional background, that, maybe aren't even aware of the opportunities that exist within private equity, or may have the skills that are required, but they don't have the access for whatever reason. They're getting screened out or sort of shut down early. And I think that's really unfortunate, because I think that really prevents the industry from getting valued perspectives that that can be different. And I don't know, exactly why that has been, over the course of, private equity's life as an industry, but it's good to see that starting to change, and that there are firms that are focused on getting at candidates that, maybe don't have, they didn't go to certain schools, or they don't have, certain work experience that is considered ideal. And there's not anything wrong with those people that do have that experience. Those are really valuable experiences, and they're kind of proven. And, that's good to have as well. But, for example, with us, we are hiring some folks at the analyst level directly out of undergrad, or who maybe have spent a year or two doing something a little bit different. They don't have transaction experience, that we can train and teach them. I think having smart people who bring different perspectives is much better than sort of looking for, necessarily just kind of check the box resume experience, because those people may not work out. There's a lot of other X factor, I think, that, that it takes to be successful here. Maybe it's finding some of those insecure overachievers, but that can take a lot of shapes and forms. And so it's one of the things that I always thought this industry could be a little intimidating for people. And, I'd really challenge the industry to try to change that perception.
I agree with that. And I think there is an element, and we talk about, like, gender diversity is a big thing, certainly across private equity, as it is with a lot of industries at the moment. But, it's a real push. I think coming from LPs, I'd like to think it was all because we needed and we want different perspectives. But I think there is just a general push from LPs, which it doesn't matter where it comes from. If it solves the issue, then perfect. And then there's a bit of a mindset shift, I think, to consider. But I think it's just looking at bringing in people with different experience and different exposure. And it doesn't have to be, in Europe, we just see a lot of, right, have you worked at Bain, McKinsey, BCG? Have you worked at JP Morgan, Goldman Sachs? Then you can come in as an analyst, and then we'll train you up and whatever else, or you come in as associate and go from there. And I was having this conversation earlier, actually, about, is there other areas that you can look? And I was like, is there other areas you'll let me look and you'll consider the profiles? I can look in other places, but, we need to kind of broaden that a little bit. It sounds like you're taking that even further and going even further outside the mold. Because you've obviously got the capability in-house to train the elements that you need them to do. And it's, again, looking at how can we find those insecure overachievers? And I'm going to say that was mine. I think I said that first anyway, actually, to be fair. I think I'll steal that one. Yeah, jokes aside, it's finding those people that are in that, top performer level, but may not have considered private equity, or they didn't go to Eton or Wharton or whatever else to then make that step. So I think that's great, and it's going to bring some different perspectives into the industry and make you guys different.
Yeah, and I think it's really hard to do that if you don't have senior leadership that reflects that. And because for me, so with MiddleGround, 50% of the partnership is female. 2 of the founders came, from industry. That's a different makeup. We have 1 female African-American partner. Those having that different experience at the leadership level is what attracts people at all different levels to come join your team. So it was one of the key reasons I joined MiddleGround, was because of that differentiated, diverse set of experiences that team had. And we've been able to kind of continue to drive that diversity, both, gender and ethnicity kind of focused, throughout the organization as we've built our team. And our senior management team, as an example, is 57% female. And so I think that's very unique for leadership, at a private equity firm, to have, that level of women, making key decisions, along with the rest of the team. We've even, started an initiative here called Women's Wing, That's for all the women in the firm. I think we're now up to, 20 women, or maybe even more. It's hard to keep track when you're growing this fast, Alex, but 20 women where we get together monthly to talk about, a range of topics covering everything from, personal financial health, messages of empowerment from women in different industries. We bring in guest speakers, work-life balance, and we run the gamut and make sure we get together and meet as a group once a month to, facilitate, kind of conversation and discussion around different issues that women face, advancing in their careers. So that's been a really positive development that we've launched at the beginning of this year, as an example.
Oh, that's brilliant. And again, it shows the differentiation of the firm and what you guys have got, rather than the talking about it. It's that demonstration of this is what we're doing, yes. This is how we're doing, and no doubt that will feed all into your online digital promotions and marketing from there. So that's brilliant. So you mentioned in the top 3 traits, that kind of element where they're always looking to learn something new. You mentioned about learning about different manufacturing processes, which I would guess there's not many investor relations and business development people that are learning about the different processes that's happening on the ground floor. But where do your influences come from? What do you kind of read, watch, or listen?
People, who I work with too. I learn something every day from, a call or a meeting or an interaction I have with a colleague, as much internally as I do from my investors or from, my banking relationships, which is one of the things that, I just love about this industry, as we talked about earlier. I think that there's a lot of smart people in this industry and a lot to be learned if you're willing to learn it. So it's my immediate surroundings where I spend most of my time. As you can imagine, spending too much time on the news in the last year or two was pretty exhausting. So I stay away from a lot of that. But it's really the people in my most immediate surroundings.
Yeah, certainly something COVID's taught me is to stay away from the news. It's nothing positive and nothing that's going to beat you. Everything that's going to beat you up and nothing that's going to pick you up to take action. It's nothing but misery, I think.
Yeah.
So, Christen, you shared a huge amount of value today, and I thank you for that. If anybody's out there and listening and thinks, okay, I want to kind of take this conversation further or ask you some questions or whatever, how's best do they reach out to you?
Yep, they can reach out to me. My contact information is actually right on our website. So I think both my email address and phone number are listed. It's part of that transparency. They could reach out to me on LinkedIn. I'm a very active user there. I check all of my messages. So would be happy to engage on that forum as well. But really look forward to hearing from everyone.
Perfect. Well, thank you very much for joining us today, Christen. I've really enjoyed this. There's going to be loads of insight. It's going to be loads of thinking. I didn't think we'd kind of go quite down the marketing route as much as we have, but certainly an area that I'm very passionate about. It's given me some food for thought with regards to the business here at Raw Selection. So thank you very much for being so open and sharing so much today.
Thanks for having me, Alex. It was a lot of fun.
And as always, thank you for everybody who's listening and joined us today. Of course, if you ever need support, either with private equity professionals or portfolio executives, please do reach out to me at Raw Selection. And if you haven't already, please do subscribe to the podcast and you'll be notified of the next one coming out in 2 weeks. But till then, keep smashing it. And thank you very much for listening.
Thank you for listening to the Private Equity Podcast on www.raw-selection.com.